Hi there, this is the story of CoreWeave, ticker symbol CRWV. Right now the market cap is over $45 billion and the price from its IPO went down from $40 to over $92. So a double in just a short period of time. Amazing. And the most important question right now is whether you can have another double or even more than that. And the answer, you will find it in this box. In this video, I'll open the box and you'll find whether CoreWeave is a great investment right now at the current price. Now, to understand my answer, you also have to look at their business. Their revenue, earnings, what they do, and their plans. If you look at the revenue, amazing growth rate. 2022 to 2024, revenue went from $15 million to over $1 billion, close to $2 billion. And more recently, for the first half of 2025, 6 months, they reported $2 billion in revenue. And they expect for the full year more than $4 billion. Amazing growth rate. And that's why the market cap went up so much. Now the earnings, as you can see, they are still losing money. 2022, a loss of over 40 million, a loss of over 600 million close. 23, 24, a loss over 800 million, and for 2025, a loss over 600 million. So for the full year, maybe over 1 billion. And this is a problem, especially if they don't become profitable. Now, if you look at their balance sheet, because you see this high market cap over 45 billion, you have to think, why is that high? They have in cash 2 billion and debt 11 billion. So debt is quite a big problem, especially if they don't become profitable. Be aware of this. Now, you also have to understand ask the question, how do they make money? They make money by providing cloud computing services, especially infrastructure. To be more precise, they rent their GPUs, also some CPUs, storage and networking. They offer that service, pay as you go. You pay depending on your demand. Now, you also have to understand that for 2024, where revenue was close to 2 billion, 62% of that revenue came from only one customer, Microsoft. And behind Microsoft, they have Azure, their cloud platform. So Microsoft is a reliable customer for the moment. They also got a deal from OpenAI, 12 billion infrastructure deal. So they will need more GPUs to run their large language model for AI. And if you believe, they have a contract backlog of 40 billion, more than 40 billion. Now compare 40 billion in contracts with the current market cap over 45 billion. You understand why CoreWeave went up so much. Now, you also look at the growth rate in revenue, and as they expect 4 billion and that growth to continue more in the future, yes, the current market cap is justified. 4 billion over 40 billion, plus this huge contract backlog over 40 billion. Amazing. Plus, I don't know if you know, Nvidia also invested in this company, small amount, 1%, and OpenAI, 350 million. So they invested in CoreWeave. And of course, you also have BlackRock and other investing firms funded with debt and other investments. Now, besides this, there is also, we have the tailwinds from this AI hype, this bubble formed. And you also have to know that, to understand the history of this company. First, they started with crypto mining. And then they switched to cloud computing. To offer those, to rent their GPUs. Now, based on their contracts, 30 billion, a lot, future revenue 4 billion, and this might double in the next, 2 years, 3 years, 26, 27. Yes, the market cap can double from this level. There are high chances because they have customers. They might attract new customers, new clients, and you can see another double in the revenue from 4 billion to 8 billion. And the market cap, yes, can go to 80 billion. That's possible. That is possible to have another double. Now, that double, in my view, is only in the short term. In my view. And let me explain why. You look here. For 2025, they will spend 20 billion to fund their infrastructure, to invest in their business. 20 billion. And if they double their capacity, this amount will increase even more, 40 billion. And what does it mean? Well, when you look at their earnings and you ask whether this company can become profitable, it's hard to believe. Because these capex in GPU, CPU, storage, those equipments, every 5 years, have to be replaced. You swap them with something better. Because if you don't, your infrastructure, your cloud infrastructure services will go obsolete. And customers, clients like Microsoft, OpenAI, will switch to other providers if CoreWeave doesn't keep investing in their infrastructure. So they are forced to spend more money in their future on this infrastructure. Now, if you divide 20 by 5, this means 4 billion a year. At least 4 billion they have to spend on depreciation and amortization. Maybe even higher. So their capex is likely to go higher and put pressure on their earnings. And I'm not sure if they can ever become profitable. Because, yes, the revenue will double, 4 billion, you might have an 8 billion. But then, will they be able to make a profit on that revenue? Because if they don't, if they continue to increase their losses, and those losses are expected to increase, are likely to go higher because they invest more in infrastructure, which requires more capital to maintain it. And on top of this, you have the debt. You have to pay interest on this debt. I mean, the company has to pay interest on this debt. So their earnings are likely to be with minus going forward. And if this company doesn't become profitable and their growth rate slows, let's say they reach revenue 8 billion, and then the growth rate is flat, 1% or 0%. When that happens, when you see a slow in their growth rate, the market cap will go down. The market will realize that this company can become profitable, and the multiple on the revenue will get lower, especially when the growth rate will slow. So now, going forward, yes, you can expect, you have the chance to have a double from this company, but I don't expect more than that. And the risk is quite high, especially if you have more players in this industry or their losses go higher than expected. You might have a decline in the current market cap. Maybe by half, especially if this AI bubble bursts, for sure you will have a 50% decline. Because the multiple on the revenue is like a software company, but a software company doesn't have those high costs over 20 billion. So this, in my view, is a risky investment, even if they have tailwinds from the AI industry, the AI hype. So to open the box and show you the answer, in my view, CoreWeave is not a great investment because of the risk. And don't forget, as they continue to report more losses, for sure they will report more losses. Mark my words, save this video and you'll see they will report more losses in the future. Then you have to ask the question, who will cover those losses? Who will pay for the losses? Tell me in the comments. And the answer is you. We common investors will pay for their losses. They will continue to issue more shares in the future to cover their expenses. And we common investors pay for their expenses. And then after 3-5 years, when the bubble bursts and all infrastructure companies stocks go down, you will have a big loss. So you can save this video, mark my words, and you'll see why CoreWeave is not a great investment. You will see it after 3 or 5 years. So be very careful with this company. Yes, in the short term, maybe next year you can have a double from this level, especially if this AI hype continues. For sure we'll have a double. But if you could look at the risk, the downside, it's quite huge, 50%. So if you want better investment ideas than this company, CoreWeave, go to my profile, press join, choose Titan Investor, and there you have access to my portfolio, where I have far better investment ideas than CoreWeave. Low risk and the return more than 2x. So if you want to stop losing money, join my membership. And if you have other questions about this company or my membership, let me know in the comments.